Eric and Justin, very nice to meet you guys.
Likewise, Arash.
You too,
So
Arash.
we just met right now, and we just had some time to quickly chat a little bit before the interview. And um, the interview, we want to talk about private placement investing, but more importantly, we want to talk about the RED LP fund, which is the Resource Exploration Development Private Placement Limited Partnership. It's a fund offered by Sprott, Sprott US, I believe, and it's being managed by the Carlsbad committee, which you two gentlemen are members of.
That's correct. Yep.
So let's start by just taking a step back, and if one of you guys can just tell me what the, and by the way, it's a very long name, so we're just going to call it the RED LP. If one of you gentlemen can tell me about the RED LP and what it is exactly.
Sure. Yeah, thanks for having us, Arash. And RED LP, as we call it, it's effectively a one-stop shop for resource investors that have a desire to participate in high-risk, high-reward private placement. Private placements. It's a segment of the natural resource sector that not everybody can get access to. And effectively, this is a pool of capital that allows investors to sort of outsource that deal origination and execution to the Sprott organization. We've sort of pooled our client capital about a year ago to be able to transact on compelling opportunities as they come our way.
And so the focus is on companies active in the natural resources space. Is there any focus on the size of company or the stage that they're at? Are you guys focusing more on juniors, developers, producers?
Yeah, so our bailiwick has always been the early stage side of the business, exploration and development, hence RED, Resource Exploration and Development. It's a segment of the market that is extraordinarily capital intensive. And these companies don't produce anything. And the way that they unlock their project's value is by issuing shares to the market. So we call them issuers, right? And private placements are the way in which they fund their ongoing exploration and development activities. So it's an area that we've kind of carved out over the last 20 years here at Sprott, especially in the US division. But Sprott organization is all things commodities, all things natural resources. That's our bailiwick, that's our wheelhouse, that's what we want to focus on.
Well, yeah, when you think about the Sprott name and brand, that's the obviously the thing you think about is natural resources, private placement investing. Just back to the fund. So how does someone invest? Do they need to have an account with Sprott in order to participate in the RED LP?
Technically, no, but it sure helps.
Yeah.
We need to satisfy a pre-existing business relationship for somebody to come in and join us as an investor in RED LP. They need to be accredited investors, and if somebody doesn't have a relationship with us, this is a great opportunity to sort of start that relationship. If you are actively investing in natural resources and you're doing it on your own, I would say that you're better served by working alongside somebody that has the in-depth level of knowledge and expertise in the sector that we do.
Yeah, and that's so when I first started learning about the RED LP, that's what was interesting to me. So I invest in private placements. I invest in a lot of natural resource companies, and I like that the value proposition here is that you get access in a way to the Sprott machine. So what I mean by that is you guys have your committee and you guys have access to basically all these resources at Sprott that gives you access to deals around the world, I believe, right? There's no restrictions on where the deal needs to be based out of. But more importantly, you're able to use your team of geologists, your team of analysts to really assess a deal and see whether it's worth investing in.
Yeah, that's a good point, Arash, and you did a good job summarizing it, which makes answering the lead-in question really easy. One of the strengths of Sprott, I mean, it's been synonymous with precious metals and the group out of the US for the longest time, has been able to be agnostic with respect to geography, to the type of metal, and this fund brings together some of those features in a very, carefully well thought out way, where we do a lot of due diligence before making investments, and we take it very seriously because a lot of our personal wealth is put into the fund as well. And it's an easy way for people interested in the space to aggregate up their wealth into a bigger entity, which not only comes with a lot of technical due diligence and a lot of research, access to, deep networks into the industry. Everybody on the committee and within the Sprott organization, in a way, helps to source deals. But coming together, the pooled capital lets us originate our own deals and lets us go to companies that we really like and be competitive with larger institutional funds in a way.
You touched on something really important here, and that is that you guys have skin in the game on this.
Yep.
So you're not just managing other people's money, you've put your own money into this. And obviously that's not like totally unique. There's a lot of funds where that's the case, but it's important to know.
It was a prerequisite, for us being able to start up a new fund, was that, anybody that's involved with managing it really needs to have some skin in the game. We mandate this of really investments that we seek out, and it's only fair that we do it in our own investment portfolios too, right?
Yeah.
We eat our own cooking.
I like that.
And it's a product we're very proud of. Why wouldn't we, right?
Yeah, exactly.
This is what we live and breathe.
So how old is the fund, and how much is under management right now?
We're not going to be able to talk about AUM, Arash.
Okay, so that's off.
Yeah. We wouldn't be able to talk about AUM, and we can talk about the fact that it's a little over a year old. We accepted it, 2020, late 2021. So we're still very much in the capital allocation phase, but I would maybe rephrase that question.
Okay, so let's talk about this. And we're talking about deal access and deal origination. Okay, can you walk me through the process and what that looks like? So you have the committee, and there's different people on the committee with different backgrounds. So for example, Justin, you're an economic geologist, correct? Eric, you are portfolio manager, investment advisor. I'm sure other people on the committee.
Background in finance,
yeah, background in finance. So you have this very diverse team of people that are bringing different skill sets and different networks, I'm sure.
Sure.
So what would a typical investment look like? Like, how is it brought to the committee? How does the committee review it? How is the decision made?
If I ever find out what a typical investment looks like, you'll be the first person I tell. The reality is, you're right. Everybody has a deep Rolodex. The committee is made up of a lot of them, most senior people who've been working out of our offices here for a long time. And it can come from everywhere. A lot of issuers come to us. We, work on a daily basis going through our list of companies that we're following, looking at progress, seeing what the news is, engaging with issuers, building long-term relationships. We can participate in brokered, non-brokered deals. We can originate our own and provide lead order tickets where it's appropriate, which means we get to negotiate terms. I don't know that we've, in the course of the last year, come up with what a typical deal looks like, but that's part of the attraction, I guess, where it comes down to having that unparalleled access to the universe of, not just junior explorers, single asset companies, developers. There isn't a hard limit on any of those. And the bottom line is, we'll do our due diligence. We'll work with the issuer where we can. And if we think the share price is going up, it's got a shot.
And so what are the things you factor in when that happens. So I know, for example, and Eric, you were touching on this earlier, which is the junior natural resource space. It's so capital intensive, and so a lot of times there's the commodity itself, there's the project, and then there's the people running it, right? And you could be in the right space with the right project, but the wrong people. For you guys, how do you measure people? Is it something where they need to have previous success, or could they be new to the business, or younger professionals that are just carving their stake in the ground? Is the people aspect of it something that's measurable for you guys? And how does the committee review that?
Yeah, no, that's an incredibly important part of it. They don't necessarily have to have prior experience, and be a multi-millionaire with a big, W under their belt, but they need to have relevant experience. They need to have experience in those types of rocks in that kind of jurisdiction. Justin and I talk about this regularly. There's geopolitical risk reality that exists in this world. But if you have the right people moving a project forward that have the ability to navigate that particular region of Peru, of somewhere in Spain, it's so important to have somebody that understands the regulatory framework, the way to sort of move a project forward, and it doesn't necessarily match with what the headlines are maybe telling you about the geopolitical risk factor there. So people is so important. You're absolutely right. But if I can expand maybe a little bit on Justin's answer to the last question, there aren't really typical deals, he's right, but it's rare for there to be something that comes out of left field that we haven't already looked at maybe a half dozen times.
You mean like a company?
Yeah,
You mean?
so in many instances, these are companies that we already are engaging with. We've already met with them because we already own them, maybe in our client portfolios that we manage. And so we're actively engaging with them to understand what their use of proceeds are, from prior financings, to kind of gauge when are they going to need to raise again. What are their spending plans on a going forward basis, to sort of understand, how quickly is it going to last, so that when a deal does go up, it doesn't necessarily come out of left field to us. We're sort of prepped for it, and we sort of know that it's coming, and we've already kind of done a lot of the due diligence and already sharpened our pencils. So yeah, the opportunity does come about where something says, hey, look at this drill hole. This is a spectacular looking drill hole. Let's get management on the phone. Let's start to talk to them and understand the geologic context. And guys like Justin will have forgotten more about geology than somebody like me will ever know, and has an absolutely deep Rolodex in the industry, and can flag drill holes way ahead of the rest of the industry to say, hey, this is something we have to be paying attention to. And he does a lot of first pass calls with these management teams before we even brings in the investment committee to say, is this, does this even pass Justin's first step of the vetting process? So there's not necessarily a typical deal, but it's a small universe of companies that we connect with, because while there's thousands of companies, they're not all worthy of your time and attention. And there are certain management teams that we have sort of highlighted over the years as, hey, they're really solid operators. They've got a really solid land package, and we ought to keep an eye on this, because as this project moves forward, there could be an opportunity for us to have a swing at the bat, on that project.
Are there ever any cases where the project's great, you love the project, you're familiar with the project, but you just wish it was in different hands, and
Sure.
so for that reason you might take a pass on it?
And sometimes vice versa, where we might love the people but not be in love with the project. There's the ways that these things can fall over is legion. And you mentioned some of the key legs of the stool there with people and project. Another one worth highlighting that you didn't mention initially was the capital structure of the company. Sometimes you can have the right people and the right project, but if the company's being put together in a non-optimal way, it almost doesn't matter how bad it is. If there's a mountain of cheap paper coming out from a shell or vendor shares that's going to be sprayed into the market, you sometimes have to just stand aside and let that go past first. So, these are all things we look at before putting money to work.
Does the fund invest in royalty companies?
It has the opportunity to.
Okay.
Yeah, if the right royalty company and the right deal came about, we certainly look at it, but
okay.
it hasn't been our core focus.
Okay, so that brings me to my next question, and that is has to do with timing, and timing's so important. And so right now, based on what I see as an investor in PPs, it is damn good timing, and it might even get better. And what I mean by that is the terms are just becoming more and more favorable to investors. You're starting to see the longer term warrants. The prices are cheap. Are they going to get cheaper? Maybe still. I was at the Denver Gold Show in Colorado Springs, and you can start to sense that a lot of companies are going to be needing to raise money soon. And let's face it, not all of them have the ability to raise money easily. I would say the management teams that can do that, it's maybe 5% of the market that can just, start calling and raising money. The rest will really struggle. So for you guys, are you just licking your chops right now, just thinking about this is the opportune time to get some, as Rick likes to say, some bargain bin deals here?
Yes, it's a short answer, but I would correct one thing. It's not necessarily the people that raise the capital, but the project, because the check writers, the savvy ones that are able to write big checks, are not necessarily coming in to follow on just because their buddy told them to buy that stock. For us in the investment committee, we really want for the project to dictate whether or not we're going to play, because the people could be, as Justin said, great earnest operators that really genuinely want to move their project forward, but you've seen the statistics of how many geologic anomalies there are identified worldwide and how many mines there are worldwide. The math just simply doesn't work out. And the best projects, regardless of the underlying capital conditions, will get their money. They will be financed. They will be able to raise capital. The terms are going to be a function of where their share price is at that time. But the onus for us in the investment committee is always looking out at which projects do we think are on their way to being future mines. Those are the ones we want to focus on. So yes, we're licking our chops because the deals that we're starting to see now would have been unheard of just 18 months ago, and that's how quick sentiment can change in the sector. You get from, love in where there's tons of money being thrown at these bankers and they're pushing paper out onto the street. And then capital flows go away, risk assets turn off. And, these projects still need to be advanced. Management teams still need to raise capital to keep the lights on, to advance projects, to drill them out. And it's our job to kind of sift through the ashes of, which companies raise the capital, and put it to work in an appropriate fashion and added value to their project that we now can see an even better opportunity set than existed a year ago.
How does the decision-making matrix work with when you actually sell a stock? So if you're looking at projects and you want to see the projects advance, at what point do you sell?
We have a pretty good idea from the work we do on what we think the intrinsic value of any given project is. And, that can change with time. It changes with every drill hole or de-risking event. But the reality is some projects can get ahead of themselves. Everybody jumps on the bandwagon and they create their own momentum, and we don't need to completely exit a position. We can right size a position along the way, which is a nice way to help manage that process. And then you've obviously got an overlay of sentiment that goes with the underlying commodities up and down through that. But it always comes back to intrinsic value.
And furthermore, the ideal exit is, as Rick would have said, is from a big cash premium from a major miner, that sees what you saw, after you got in nice and early, and takes you out at a big, 50% premium, all cash offer. Those are the best opportunities. We're only about a year into this fund's launch, so we've been mostly in a capital allocation, planting seeds as opposed to harvesting them. But to Justin's point, we don't think of things in our portfolio in an all or none scenario where we're in today and out tomorrow. These projects, when we oftentimes come into an investment, we're oftentimes looking at it as, okay, this is a good first tranche, but we expect that we're going to have to keep increasing this investment as the company is further de-risked, as the project is further de-risked, as the company advances it along, and as their need for capital comes along. So we kind of look at things as scaling into positions, and the way Justin and I have always managed to count portfolios is scaling out of them to sort of right size the position. If something grows from an otherwise small allocation because they had a great win, they hit a great discovery hole, and now suddenly this comprises an outsized and disproportionate amount of the fund. As a fiduciary, it's your responsibility to sort of bring that back into an appropriate appropriate allocation size.
Is there ever a case where, so you love the project, you like the people, they're moving the ball ahead, everything's good, but you just kind of sit there and you're like, damn man, you guys need to get out there and promote this thing a little bit better. This market cap could be bigger. This is like, people need to find out about this.
Yeah. So the promotion angle is sort of an important slice to the junior mining space. But the truth be told, the best projects, the market will sniff them out eventually, and that will take care of itself. The market doesn't usually leave too many stones unturned. In that regard.
So it's not a red flag for you if project's good, people are capable, but they're just not good promoters. You're not gonna turn it down. You're just gonna be like, okay, this one's just gonna take a little bit longer.
Yeah. We would like for the use of proceeds that we've put into this company to go towards advancing the asset and into the ground, as opposed to advancing the stock price, if that makes sense.
Yeah, that makes total sense. Okay, so let's talk about the timing of the market. So 2022 is almost done. We're going into 2023. We're in the midst of, I don't know, a technical recession. I don't know, depends who you talk to. Uranium is exciting. Lithium is exciting. Precious metals are down and out, but a lot of people just waiting for precious metals to return. What are your guys' just high level thoughts on what next year could look like?
Justin, you want to go? What's your 8-ball telling you these days?
Before we launch into individual metals, and I'm happy to chat on any or all of them, one of the strengths of the way this has been structured is not all metals will be in a boom or bust at the same time together. So there is opportunities there to take profits when things are strong. Obviously, everybody loves lithium right now. Like you said, precious metals are standing alone. Everyone's pretending they've never met them before. If you're conscious of market cycles, ways to be counter-cyclical out and around and through this. For longer term themes, I think we're all very excited about the concept of the electrification of everything, about the transition of the various matrix of energy products away from fossil fuels and towards renewables, and what that means. The concept that batteries are increasingly going to play an important part in our life, and the components that go into that. And that means longer term things like copper, nickel, cobalt, lithium, which you mentioned, uranium as an energy source are important. a lot of our DNA is invested in precious metals. And in the short term, as long as the Fed continues to be aggressive with interest rate rises, the boot is going to remain on the chest of precious metals, at least through until something happens to change that. Whether that's a need to temper into, an election coming up at some point where a more functional economy's, attractive, time will tell. But the trick isn't to necessarily be trying to look sort of 6 months out, but think where you are in the broader, longer term cycles.
So let me ask you this: when we look at the data, and I just looked at the data recently for different metals and total deals and total capital raised, gold, I believe, is still number one. And that's just this year so far. And I believe uranium is second and lithium third. So even though precious metals is kind of like the loner at the party that no one wants to talk to, there's still funds being raised, deals being done. But the miners, at least this last little while, they just haven't moved as much. Why do you think that is?
Just downwards.
Yeah. Well, yeah, they moved the wrong way. Do you think anything has changed? And this is a question that comes up a lot, and it's not a question of, I don't want your thing. I'm asking this to get your thoughts on this is gold versus Bitcoin. But do you think Bitcoin has taken away some of that momentum that would usually be behind gold, that would drive it? And it's kind of distracted now, and it's kind of starting to flirt with Bitcoin and other cryptos.
I'll take that one, Justin. Sure. Probably. There's only so many. There's only so many pieces of the pie of investable assets that exist globally, and Bitcoin is an asset class. Love it or hate it, whatever you think of it, whatever your personal views are of it, it's capturing a slice of that asset class. It just is. But our market is in large part dictated by fund flows. When people care about commodities and precious metals, we see massive amounts of inflows. You see the rising tide lift all the boats. And then when the tide goes out, for every seller, there's got to be a buyer. And if the buyers have stepped back, it's going to go lower, and you're going to see a bear market ushered in, and that's just the reality, the feast or famine that we kind of have come to know as our normal operating environment. But it doesn't seem like it's going to change anytime soon. If you roll back the clock 50 years ago, precious metals did exist as a larger slice of people's investable assets, and some of this data exists globally. It's still pretty accurate, but here in the U.S. and other parts of Europe, a lot of people's capital is invested in the U.S. equity market, in other asset classes. They're residential real estate, whatever the case may be. Now Bitcoin's one more thing competing with that slice of the pie that is going to be carved up amongst. And I think, and I'm sure the World Gold Council could tell you more accurate numbers than this, but I think it's like 0.3% of America's collective investable assets is held in precious metals, whereas historically it was like 2%. And I'm sure my percentages are probably off by a decimal point here or there, but gold is it's money. It always has been, and it will continue to be, with or without these new digital currencies. But if there's more competition, well, as capital looks for non-dollar, non-US equity market assets, you've got rare cars, collectibles, Swiss watches, wines. You got all kinds of things that just didn't exist as investable asset classes 50 years ago, 100 years ago. And Bitcoin is now, a new kid on the block, and it's capturing a lot of that appetite.
Eric, I got to give it to you as a mining guy. That was a very fair answer. You didn't
Look,
You
it's
didn't
the
throw any
truth.
shade
It's
at
the
Bitcoin. No, I
truth.
appreciate that. Hey,
It's the
listen,
truth,
I like
and
that. Some people get worked up when I ask them that, but you're absolutely right. It is the truth. It doesn't matter what which you prefer. It is the
yeah,
truth.
yeah. One thing
Okay.
I always loved it when Rick said. I always loved what Rick said. What I think is not relevant. The market is going to do what the market's going to do, and that's the
Yeah,
truth.
that's
Whatever
true.
I think of Bitcoin is not at all relevant to this conversation. It is capturing hundreds of billions of AUM, right?
Are you are you guys both based out of Carlsbad?
Yeah.
Okay, so you guys both worked with Rick then, right?
Sure. Oh yeah.
And were you
Yeah.
with Rick from pre-Sprott with US Global?
I was. Yeah. Yeah. In fact, everybody on the team has been, in the investment committee has been, here pre-Sprott, well, I guess maybe not pre-Sprott Global, but with Rick prior to his retirement. And I'll tell you, Rick as a mentor and a friend, I mean, he's an incredible man, the myth, the legend, right? But he always maintained an open door policy here at the Carlsbad Group, and it's a fairly small organization. We're a boutique, subset arm of the greater Sprott behemoth. And Rick had a lot of lessons to share, and he was always really generous with his time and happy to share them. All of us benefited tremendously from Rick's tutelage over the years, to be sure. Yeah.
How active is still Rick? Like, do you guys pick up the phone, talk to him? He seems like he's still. I mean,
I talked to them an hour ago. Yeah.
Yeah, I don't think retirement is really
No.
it's not
And
his
we
thing.
knew he wouldn't retire. He spent about a week, and then he was bored, and so he started another business. But
One of the few things he failed miserably at.
yeah.
Okay, so I want to ask you guys about the uranium market. Sprott, obviously, with the Physical Uranium Trust has been a real catalyst for just waking the uranium market up and getting excitement from all corners of the market. But we're still far away from those peaks that we saw in 06, 07 when it was $100 and more a pound. What do you think it's going to take, or first of all, hold on, not what's it going to take to get back there? Do you think it will get back there? Like you hear a lot of uranium people. By uranium people, I mean management teams and just uranium bulls keep referencing that number. Is that realistic for a return to $100+ per pound?
What's your time frame?
Man,
the answer is maybe. And what Sprott did really well was allowed price discovery for the first time in a long time, and generated a lot of excitement and interest in the spot market rather than the contracting market and the term market. I personally would much rather than have dizzying peaks and sort of terrifying troughs have a nice sustained growth as uranium becomes a bigger and bigger part of the energy mix. Now, sentiment's going to run ahead of it. It's a relatively small market, which is how you get that. That's fine. We will work around that as it comes. I think everyone agrees more and more that uranium has a role to play, and an increasing role to play in the future mix of energy products. And bringing new reactors online isn't fast or isn't cheap or isn't easy, but it's going to have to happen. So if you're willing to be patient, I think 100% we can get there.
But just don't expect a quick turnaround. I mean, that's basically, it could happen, but even if it does, it's not healthy for it, because I think if, I mean, I remember the $100 plus days. It was crazy. I always tell people
it would be sentiment driven rather than fundamentals driven.
It was so wild. I share this story all the time. I remember overnight we would have clients that would email us and tell us, "Hey, we're changing our name from so and so gold to so and so uranium," and overnight they would get a bump in their share price just from a name change. That's how wild it was. But like you said, as fast and hard as it went up, the crash was obviously fast and painful as well. For you guys, taking the long-term outlook and approach in this sort of structure, how does I guess the communication with the limited partners, with the investors work? Do they want to hear a lot of updates on what are we doing, what's going on, what are we investing in, or is it just more like a quarterly update? What's typical for a fund like this?
Yeah, good question. We do quarterly updates. We do written quarterly updates to LPs. Since we're still in the capital allocation phase, I've been pretty clear with existing partners. We don't want this to be a black box where you don't know what you own. But at the same time, if we're writing a starter investment check to a company that's got a 10 million market cap, and we're expecting that we're going to make a follow-on investment to that, we don't necessarily want competition even from our LPs, incidentally, on that might learn of that name and somehow bid it up, and then the next time we're going to write a check, it's got a 15 million market cap, and we want to kind of we have to kind of play our cards close to our vest in this regard. But when we get to a full position in something, we're going to be increasingly transparent, and we've showcased a couple of investments that we've sort of bought all we intend on buying at the current moment, and we've kind of talked widely about in our quarterly communications with these what it is that we've done with the capital.
Can you share with us what those investments are, or is that not for us to know?
LPs only.
LPs only. See, that's not fair, because I wanted to join, but you guys got something against Canadians, which is just
no,
on
the contrary. We
nice.
are as of June, we are now open for Canadians.
Oh, really?
Yeah. So any of your Canadian listeners want to email us, contact @Sprott USA, SPROTT, there's no U in there, SprottUSA.com. Email us, and we will put you in touch with a Canadian representative who can talk to you more about joining in for Canadian investors.
Well, listen, that's big news. We should have started with that, because I've been really upset with you guys. Okay, so we covered Canada, but we have people from overseas as well. Are there any countries that you can't take investors from?
There are certain limitations on European investors with reverse solicitation rules. It's a bit complicated, and I don't really want to get into it right now, but the answer is no. We're mostly available for international investors.
Okay, and can you just explain for people that aren't familiar with how these limited partnerships are set up? Once you put your money in, when can you start drawing money out?
So we have a 1-year lockup, and there are some gates that we can put around that if there's a sudden rush of redemptions. Keep in mind we are investing in small market cap companies that can be thinly traded, but we aim to handle liquidity needs as appropriate, and right size positions to be able to answer liquidity. But we want for our investors and our LPs to think of this as at the low end, a 3 to 5 year investment. This is something that's, look, Arash, when we talk about commodities, and we were just talking about uranium, and you mentioned long term, I kind of smiled a little bit, because short term in the uranium markets is 10 years, right? So there's this time lag arbitrage that can exist in the commodity sector that a fund like ours that has the ability to look out a little longer term can really take advantage of. And if an investor is looking for hot money, this isn't the investment for them. If they're looking for us to be traders, well, we're not traders. We're not speculators. We don't get into a stock today with the intention of getting out of it 6 months from now, or even a year from now necessarily. Sometimes these investments, they can take 10 years to really mature plus. And when I say mature, I mean for a management team to drive an asset forward to unlock its value such that a major miner pays you a big premium over the to own it and run that asset there on out. And we want some of the best wins that my clients I've enjoyed over the years came from being early in an investment, and then riding it through the ups and downs of the market cycles as the company completed de-risking it until, you know, a big premium was paid at a later date. And obviously it doesn't always work out that way, but you almost always get another bite at the apple. You know, if you miss the initial run up, you know, you almost always get another bite at the apple, because investors have increasingly, you know, short attention spans and short patience, you know, for what they'll tolerate. You know, okay, a lot of investors will look and make their investment decisions simply based on the share price and you know, what's the chart look like, and there's no due diligence beyond that. You know, thematically, what's the commodity, you know, or what's the share price doing? Is it up? Is it down? Is it sideways? There's so much more to you know, to this than meets the eye, and it's a guy like Justin that can really, you know, dive in deep to find fatal flaws on projects, to say, you know, this is one we want to stay clear of. You know, a big part of our investment process is saying no and finding reasons why a project is not going to work. The sooner we can identify a fatal flaw, the sooner we can stop paying attention to it and move on to the next one, right? So, you know, it's not sexy, and it doesn't get headlines, and we can't do a victory lap if we say no to an investment, but it's important, and it's incredibly useful for our clients and our LPs to be able to say, no, here's why we don't think this one's going to work, and we should not touch that. And it's so useful and so important, and unless you have a guy like Justin on your side doing that heavy lifting, you know, individual retail investors are just, you know, they don't have the same skill sets that we do, and it's just the reality of you know, being in this business.
Well, I think you make a good point, because you're right. A lot of investors do look at share price and chart and maybe the metal price and what's going on, but it's really hard.
Yeah.
You have the technical capability to look at a project and determine whether it is the right fit or not, if there's value there, how the value is unlocked.
Yeah.
And I guess that's one of the benefits of a fund like this, is that, you know, you don't need to take geology classes online or watch geology videos on YouTube. By participating in funds like this and having access to guys like Justin and other technical people at Sprott, a lot of that is de-risked for you. Maybe not completely, but it's certainly much better than what you could do by yourself.
You're right, Arash, and you know, Eric's being very generous with the compliments, but we're very fortunate at Sprott that we do have a deep roster of technical expertise, a very deep roster of, you know, market and commodity expertise, and access to a whole bunch of networks and contacts and consultants as appropriate. So, you know, to circle back to a point that was made earlier, it's rare that we see a new name we haven't looked at for the first time come through the door, and we'll normally have some background, and certainly we'll have capability within the group to look at that through the right lenses to understand it, whether that's, you know, market experience or engineering or metallurgy or any of the fundamental aspects.
I want to ask you guys two last questions, and I don't know if you want to divvy them up, or I'll let you guys decide, but I'll ask both of them now, and then you guys decide how you want to tackle it. So the first one is, why a natural resource focused fund? What's the value proposition there? Number two, why the red LP versus doing it yourself? And I think we've covered some of the points, but it'd be good to just kind of have a summary of the two things, and then I'll let you guys get back to work.
Will I do why natural resources, and you can summarize why red LP, Eric?
Works for me, Justin.
You know, in a way, why a natural resources fund? The answer for us is kind of self-evident. It's people are interested because they can make money at it along the way. But as we've touched on, like all industries, it's very niche, it's incredibly complicated. The possibility for excellent rewards are there, but they come with commensurate risk. So how do you reduce those risks in the natural resources space? This is Sprott's bread and butter. This is what we do for a living. You know, we didn't have any choice as to why a natural resources fund. This is what we know. And before joining Sprott, I spent decades doing what all these other guys are trying to do, which is go out, make discoveries, develop projects, work in the best mines, try to make things a success. We're just coming around one more corner of the desk and giving other people a chance to participate alongside everybody else in the industry, trying to have success along the way. But why a natural resources fund? This sits solidly within our sphere of competence. There's a Venn diagram, which is just a circle.
I like that.
And why Red LP? I mean, look, in the first instance, there's just simply no way a regular investor is going to be able to get access to the fire hose of information that we have sitting in the seats that we are in here at Sprott. I mean, let alone the level of deal flow that we see. Our role as regular providers of capital to these companies means that we're oftentimes getting a priority seat at the financing table when the book runner is starting to carve up allocations on an oversubscribed deal. Sometimes a really fantastic project might put up a deal and it's spoken for within an hour, right? And how is a regular investor possibly going to get access to that deal? But a lot of times, you know, Sprott is a name that issuers, companies want to be able to boast on their share registry. You know, so that's kind of some additional leverage that we can use to secure our fills. But you know, look, Arash, we're talking with these companies that we're writing checks to on a monthly basis, and you know, maybe we have an existing investment in the company and we want to be constantly kept in the loop on how the project is progressing or how our capital is being spent. But it's simply a level of due diligence that would be impossible for a regular investor to be able to replicate on their own. The investment committee is comprised of 5 senior individuals at Sprott, and we divide and conquer. But you know, in addition to that, we have the full weight and force of the Sprott organization to scour the globe. And I mean the globe. A lot of our deals that we're doing are in Australia, which, you know, for readers of or listeners of this that are not invested in Australia, you're missing out on a good chunk of where new discoveries and where new projects are coming from. You know, keeping on top of your investments is one thing, but constantly being able to scour the landscape of opportunities worldwide is another really equally important component to this. And so that's really, you know, Justin said this is something that was really well thought of. And you know, when we launched this and we got about 6 months into it, I had kind of this moment where I genuinely got frustrated that we didn't think to do this earlier, because the team that comprises the investment committee, we've all worked together now for probably over 7 years, I think, and it's a dynamic that's really gelled. You know, complementary skill sets internally here, and I'm really proud of it. You know, it's something that I can look at with a lot of pride, and it's why, you know, I have a substantial amount of my net worth in it. You know, it's just because it's something I truly believe in.
I think the access to the reach and the technical expertise that you guys have make this a very interesting and compelling offering. I know as someone like myself who you know, I like to think of myself as an experienced private placement investor. There's just things that you get access to with the Red LP that you just can't. Doesn't matter how much time you spend by yourself researching and investing in these deals. You're not going to have the team, or like you said, like looking in like ASX or just Australian deals. Who's got time to look at all over the world?
Yeah. Much to our wives' chagrin. A lot of the times we're taking calls, you know, when it's otherwise dinner time here, because that's when the Australian markets are open. But another really important aspect of this, especially for your U.S. listeners, is is the U.S. authorities have really made it rather challenging for us Americans to do foreign deals, Canadian in particular. And the level of paperwork has become increasingly onerous. You know, getting restricted paper. You may not know this because you're Canadian, but when we U.S. investors do deals, we get restricted stock, and it's a real pain in the butt to find somebody that can deposit these shares for you. I mean, we're talking physical stock certificates in many instances, and that level of paperwork has only grown over the years. You know, bureaucracies don't usually get smaller. You know, that's just something I've learned. And so it, on one aspect, we decided to do this because we were just tired of being super inefficient with our private placement execution and like the workload we were asking our clients to undertake in terms of removing legends, filling out subscription documents. All this has to be done in a timely manner. And if somebody happens to be on vacation with their family that week, hey, you missed out on that deal. Too bad, so sad. Call me on the next one. It was impractical, and this cleaned a lot of that up for us. And for some of my clients, that was all the selling I needed to do. Is, hey, I won't bother you with paperwork anymore. It's like, sign me up. like it was as simple as that, because people understand that, okay, we're going to earnestly look for deals that we think we can buy low and sell high. That's what we're trying to do here. And obviously not every deal is going to work out, but when we can do it in a pool fund like this, we don't need for every one of them to work out. We need for the majority to work out, and that's how we will grow this, over time. And for our clients that kind of saw the light, it was sort of, they were pissed at me. Why didn't you think of this sooner, kind of thing. So yeah, that's why Red LP.
I think I think that was a great. You made a great case for Red LP, but also I think the timing is incredible now. So yeah. I want to thank you guys for your time. I really enjoyed the conversation. I wish you luck. I think we're going into 2023 is going to be a wonderful year of many opportunities, especially in the natural resource sector. I hope we can do this again and do a follow-up at some point next year and see what you guys are up to.